let's go ahead and move on with yet another financial sector, at least related company, and see what's on Ann's mind tonight.
This stock has been on my radar screen for a while now. In fact, the last two times I presented in Roundtable, I almost presented this, but I went with the other two companies that I presented. Unlike what its name says, Portfolio Recovery, was something we all could have used in 2008, this is actually a debt collection company. But they try to say that they're a little bit different in with the way that they go about doing their business. If you could go to the first slide, I wanted to tell you, if you'll go to their website of portfoliorecovery.com and click on Investor Relations, you'll see over to the left it says Presentation, and this is where I got these slides from. It's actually a 26 slide presentation, and any of you want to go to it, you can see this presentation they did at a real estate forum. This shows you what their company does. Their core assets and bankruptcy is their main business. They actually have 27 million customers that they're working with, trying to get the accounts cleared for these people who have credit issues. And then they also have fee-based services, and this was an area I was surprised with. They work with auto finance companies and actually government services. Next slide. They go out and they buy accounts from different agencies like credit card businesses or banks or retail agencies, and they actually own the accounts. They end up paying, I think it says here, they paid $41 million in face value of something that was actually worth $1.2 billion.
Wow.
So I think it's the other way around.
Is that what did I say it wrong?
Yeah, I think they paid $1.2 billion for $41 billion in assets.
Right. I'm sorry, I said it wrong. So they average, their collection rate averages 2.5 to 3 times what they paid for it, which is, pretty good if they are able to collect it. In their bankruptcy area, you can see they're more into the installment loans, and anybody that's back paid on their autos or telecommunications. So I'm assuming that's like your phone bill. It may can help me here. I'm not sure about that.
Well, yeah, just to give this some context, and the way I read this is they basically, if I owed somebody $100, they assume that liability, and they pay $2.50 for it. So if they can get anything between $2.50 and $100 out of me, all they got to get is $5 or $10, and they've made a mountain of money.
Right, exactly.
They just do that again and again.
So, and they've got 27 million customers, so they're bound to get some money out of them. So, if you go to the next slide, this was an area that I didn't have any clue that they would have done. They actually work with government services to collect back taxes or delinquent taxes, which I would not have thought they would have done that. But it kind of makes sense because most government agencies, like small towns or whatever, don't have the manpower to be collecting back taxes. So this is something that they do for them. And I did try to talk to their investor relation person today, but she was not in. And the one person that I did talk to said they actually have a system set up where they're working with auto refinance companies, and they can actually go out and repossess cars for them, which kind of surprised me. I wouldn't have thought they would have done that.
Great. Now I got to watch the cars in my driveway.
Exactly. And then they also, at the bottom, I believe it's on the next slide. No, go back.
Okay, I'm sorry.
I'm sorry, go back.
Gotcha.
They also work with institutional investors on claim settlement on class actions. and that one surprised me too. I wouldn't have thought they would have done that. The next slide.
Okay.
Now this was the one I called the investor relations zone, and Ken, since you said this was something you had followed for a while, I didn't understand what the NFR and ERC would be. Do you have any idea what that might be? Ken's not there.
Yeah, I am. I'm talking to a muted microphone.
Okay.
No, I don't. Not right off the top of my head, I don't, Ann. I'm sorry.
Okay.
Yeah, I don't know what the letters mean. I know what the concept is. It's an inventory of receivables. I don't know what the acronyms are for.
So they have 880 million in possible is what they've paid for it, and they can get 1.8 billion. Is that what we're thinking?
It could very well be. That sounds almost low, but it has to do with having this inventory of receivables where they're sure they can get a portion of it.
Okay. Okay. And also, they recently acquired a company in UK, so they're expanding their business overseas. Right now, they operate in 10 states here with 2,500 employees. And their philosophy is that they buy these debts, and so it's theirs, and they can work with people on their own time basis. So they're not pressuring people. They're trying to actually work with people to get money from them. And cool. They feel like it's in their best interest to do it that way. And I'm grateful to say I'm not one of the 27 million people they're working with, but I actually got a phone call from them a couple of months ago. And they had my phone number with someone else's name. And I have to say that the woman was very generous talking to me, and she was, understood that she had the wrong number, and it assured me that they would not call me back, and they haven't. So with the things you hear about debt collections agencies, they're not always very nice on the phone, and she was very nice to me. So if we could go to the next slide. As you can see, their quarterly cash collections and revenues have grown significantly through the years, and they are continuing to buy out debt, so these revenues should continue to go up. And they are listed on Forbes' best small companies for the last 4 years. And this is the value line. You can see they've kind of continued to go up in their prices. Ken said he's had this for a while and has made good money on it. I wish I'd had it earlier, but I really didn't know anything about it. Okay,
yeah,
next slide.
I suspect that Ken discovered it either around Halloween 2008 or Halloween 2009, and either one of those looks pretty good to me.
Right.
I was just going back and finding out when I first purchased this stock, and I purchased it a number of times, but my first purchase was actually back in 2003, 2004. So I've owned it for an awful long time.
Yeah, so you have done really well with this. So, and their stock has dropped back just a little bit recently. As of today, it was at 67.11. So it has dropped off a little bit from this high, which would make a good opportunity to buy this.
One of the things I wanted to point out here on the Value Line sheet, this is from the extended or expanded edition of Value Line, and that's why the company name has an asterisk. So there's actually less forecast information. The only forecast information that you'll find in the expanded edition, and it generally comes from Zacks or analyst consensus, are these numbers over here on the right for earnings, and they sometimes will give you PE ratio forecasts. But there's much less information with respect to that sort of thing than with the standard edition of Value Line. So I just thought we would show that for people that are not familiar with the expanded edition.
And this is definitely a small company in every sense of the word. and their how much that they are making, and their growth rate, projected growth rate, certainly makes them a small company. Okay, this is the Manifest Investing. You can see it's a high quality company. The PAR is a little bit in the yellow area, but that doesn't tend to bother me too much. They're projecting 18.9% growth, and their 5-year forecast of EPS is $14.16 for the EPS forecast. So with an annual return of 22.3. And Mark, if you could switch it over to me, I was going to show you my SSG.
Okay, I think we can do that.
Mark, while you're switching, you might want to just remark also that one of the metrics used in the in this particular industry is dollars per hour, which really means how many dollars do they recover per hour per caller, and that metric is quite closely followed by the industry. There's a couple of industry journals that you might go to bizjournals.com and read the journal in the debt collection industry, and you'll see that that metric is cited quite often, even though it's not something you find on the typical value line sheet.
Okay, and you should have, I think you have to accept the control of the screen, but you should have it,
okay,
a window coming up telling you that you can do that.
Okay, do you have it now? Are you seeing my SSG?
Yes, go ahead.
Okay. As opposed to the two bank stops that they were a little bit up and down, this one is pretty much as Ken likes, up, straight, and parallel. And you can see that the estimates for the Yahoo Finance, my estimates are pretty much in line with they think what's going in the future. I have made mine a little bit below what Manifest has. I tend to be a little bit more conservative. If you
and by the way, Hugh, this is what an SSG looks like when it actually has earnings.
If you can see on the back, their pre-tax profits, their pre-tax profit on sales is pretty consistent. Their return on equity is pretty consistent also, and their debt to equity ratio is pretty good. I am pretty close to Manifest in my projections, but it comes down to it is in the buy range, and if you'll see at the bottom is at 18.2 projected average return. And I can go ahead. You have I think the next slide, but I'll go ahead and do it because I have it in mind. You see a little bit of difference in the Eagle from if you just use the information from Manifest. But either way, it comes up pretty good, SSG and Eagle. And so that's my presentation, and hopefully it'll do okay.
Well, thanks, Ann. We'll go ahead and switch the screen back to me and press on.